Hello stock traders, this is Tony Oz, August 17th, Fed rate cut day, beautiful rally off the bottoms and right into the previous channel continuation pattern that we have set here. If you guys can please go back to the newsletter back from when I talked about 1998 and the continuation patterns and how they were breaking down, that's exactly what we did this week. We broke down through the continuation pattern, and now we're rallying back right up to it, and the market looks good right now. However, when we look at this S&P chart, we got to remember that the true opening price is not really the true opening price that you see on these candles. So let's use the Tony Oz trick here, and I'm going to look at the S&P futures chart, which I set up just for during the trading hours of the New York Stock Exchange. So you see this gap open here that we had from yesterday's close that was here, all the way up to the opening here. Up there, sorry, and we actually closed below the open. Obviously, we had a big gap, and you can see 1, 2, 3, 4, 5 days in a row we actually closed below where the open value of the futures was at 9:30 a.m. Eastern time. Each one of these candles, like I mentioned before, is 6.5 hours, and they go on from 9:30 till 4 o'clock. So this is what I'm looking at here. Now, based on this chart alone, I'm thinking that this low here has to be retested, which will be the same, just about this high. So I think at one point, let's say we went up like that a little bit here. There's a little bit of room on the upside. I'll show you where the 200-day moving average is, where the resistance are that are coming in here. But as we roll over, remember the lows have to be tested before bottom can totally be put in, okay? So I think that at least the closing price of this day on the index chart, which I'll look at in a little bit, should be tested again on a little pullback. And then if that holds and if it turns around, that'll be a great place to put a stop loss and go long. We may want to even take a short on the rally attempt here, and I'll show you how to play that. I'm going to look at first here, one that has the 200-day moving average on the SP500. The 200-day moving average, the red line there, pretty close by here. The 100-day moving average is up here, which anywhere between these two, I believe we're going to top. So if we're going to run a trend tool and take a horizontal line here, actually, give me a horizontal, please. Thank you. This is basically, I think, where the resistance level is going to be. And if I run my regular over the top here, we're going to have another resistance coming in here. So it's between these two lines that potentially about this level that I think this rally attempt will probably come to a halt. And as soon as we see first sign of weakness, we're going to take a short and put a stop above the high of the previous day. So when we see the first down day after this rally, a stop over the high, and we're going to look for at least the closing number here to be tested. Okay, let me look again at a 50-day chart here. So here again is if I run the horizontal line right here. So it's between, now we're looking between the 50 and the 20. This is where we broke back into this channel. Some people may say the channel is really between these lows and these highs, which will be right here. So I see that 20 coming into play. I see that trend line going from over the tops coming into play. So we're going to have some resistance on this rally attempt, okay? It may overshoot a little bit, so we're going to look maybe for these tops. If it shoots up that high, if it shoots up over the 20 and taking the first weakness sign, placing a stop loss above the high, and I expect this level here to be tested again, this one, and most likely I expect this close at least to be tested, if not the low, before we can say we put a bottom in the market. Short term, very, very short term, this is a bottoming pattern. This is a candle in a hammer candle in a downtrend can say the downtrend has ended. However, we can still go like that and come back down here and rally back up. So this hammer will be the signal of the end of the downtrend. However, there's maybe a buying opportunity somewhere here versus right up here or up here right there, right now. So I'm doing this newsletter today a little bit early because I'm going out of town, and I hope you guys were able to capture some of this run. I got some really good trades on this day, but I can't show you because I gotta really literally run and catch a plane. So trade smart and have a great week. We'll talk to you next week.